What's up, guys? Welcome back to DCA. So what we're going to do in this video is some fact checking. We hear a lot of people, a lot of these different YouTubers talking about the fact that this market is very likely about to, if not in the very short term, very soon going to get kicked off into a rally where we start to go back to new all-time highs. All right. So I'm hearing some of the more popular people talking about this. And today, I'm not going to say whether they're right or wrong because, quite honestly, I don't think we know. I don't think we know exactly what's going to happen. I think we can look at this market using a probabilistic approach, and we can say that, based on everything that we've seen in the crypto market in the past and everything that we're seeing right now going on the macro scale, that it's very likely that that's not going to be the case, that we start to head towards a new rally. But what I want to do in this video is show you a metric that you can look at in order to determine whether, these price pumps that we see, whether there's something backing them or if it's very likely that they're sort of one of these classic Bitcoin moves where we see a pump followed by a dump. So, classic examples of that would be January, where we saw this move from around 35,000 up to around 45,000. Then we saw it again here in March, where we went from around 37K up to 48K. So I want to show you a metric which is very useful for identifying if there's any substance to the rally, or whether it's very likely just a short-term move that's quickly going to be followed by a sell-off, in the setting of this longer downtrend that we're in. We've been trending down ever since November back here, all right? So we've done nothing but trend down, and there have been all these kind of fake outs. We've had all these fake outs in between. The fake outs in Bitcoin are only half the story. When you look in the social media space on YouTube and on Twitter, there's nothing but fake outs there because people that are ostensibly knowledgeable about this topic consistently tell you, I'm bullish on Bitcoin right now, that we're at the bottom. They told you we were at the bottom in December, max pain at 52K. We were at the bottom at 41K. We're at the bottom at 35K, et cetera, et cetera, et cetera, all the way down to where we got to 25K. And how many people were out there telling you we're never going below 30K again? Okay. So let's get rid of all the noise, forget my opinion, forget their opinions. Let's look at some hard data that can support when a price move is actually occurring, or if it's just another one of these fake outs. All right. So what we're looking at here is sort of an estimate of market liquidity. So this is the price volume, and we're looking specifically at the Brave New Coin Liquid Index. So the price data we're seeing is actually 1 day behind. If you go here, you'll see that the most recent day is June 5th. But we're not looking at this to identify an exact, the exact day that the market turns around, because you're not going to find that. There is no metric out there that's going to say this is the specific day where the market turned around. But what you can see with this metric is a turnaround in liquidity, because what we're looking at here is essentially the amount of dollars being spent on the asset, okay, or being traded on the asset. And the Brave New Coin Liquid Index is good for this because it tracks a lot of the top exchanges. So it gives you a very good picture of how many dollars are flowing into or out of the asset. And just at a base level, let's take a look at where we're at right now. So we hit this peak out here in May. That's sort of where we hit the liquidity peak. All right. Now that came in a sell-off. So this may not be the best place to look at. So we will actually come over here to February, because you have to remember, dollars flowing into or out of the asset can occur in both directions, right? You can have a super high volume day or week while at the same time dropping significantly in price. But these tend to be short-lived events. All right. So what we're looking at is the price volume. And this metric that we have estimates how many dollars over time are coming into and out of the asset. So you see that the peak in positive price flow, so dollars coming into the asset associated with a positive price movement, actually occurred out here in February, right at the end of February, right here at around 57K. So we hit 57K, money was coming into the asset, and then notice what happened. Money stopped flowing into Bitcoin. There was a reversal in the liquidity in Bitcoin as an asset. And you saw this drop all the way through April, all the way up to the all-time high. So we actually hit the all-time high with lower liquidity coming into the asset. So less interest in the asset, less sentiment for Bitcoin, and more money flowing out of Bitcoin and into altcoins, because we know empirically that altcoins at the time were going up all the way through this, basically the middle of May. From that point, we got this big sell-off right here, basically in May. This continued all the way through July when the market started to turn around. And what you saw at the time was that we got a small increase in the dollars flowing back into Bitcoin and the total crypto market, essentially, but it wasn't significant. So from that peak in February, our liquidity was actually down about 30%. So the amount of dollars flowing through the asset were down 30%. And where we're at now in relation to that, we're actually sitting down around 57%. Okay, so we've come down significantly. And if you look at this over time, you can see that we're in a pretty clear downtrend. This one peak, this actually occurred at a sell-off point. Let's look at what a recovery looks like. So as you're coming from a sell-off into a new bull run or a new price move, let's take a look at what that's going to look like. And we actually have two good examples of it. Okay, so the first example we can look at is back here in 2018, and let's move the price up. So back in 2018, we saw that essentially Bitcoin gets a huge amount of, money flowing into the assets. We saw that basically an estimate of the liquidity or the amount of dollars flowing into the asset, this went up almost 10,000% from 2016 up till the peak in 2018. So there was a huge amount of influx of capital into the asset from back here in 2016 up to the peak. But then what you saw was right here, once we hit this price peak, a lot of the retail market who had FOMO'd in, then they started to, dump out of the asset. So they were capitulating essentially. And we saw the amount of liquidity in this asset just absolutely dump at this time. So if we just look at this channel here, you basically saw nothing but a sell-off going on all the way from December of 2017 straight through to March of 2019. All right. Now, what did a rally look like? Well, there's two things you may note here. First of all, you may say, well, what about this big peak right here? What about that spike? That was just like we saw in May of 2021. It's a huge spike of dollars being traded on the asset, but with a large accompanying drop in price. So that indicates a capitulation event. And that's exactly what we saw. So we saw this huge increase in the amount of dollars being traded on Bitcoin, accompanied with a massive sell-off. All right. So we had a 50% price drop. We lost this 6K range. So you could see that we were holding this 6K range as a level of support from back here in October to November of 2017, straight through November of 2018. So for a year, we held this level. And when we dropped below that level, that's when you had an accompanying capitulation. So an increase in the number of dollars being traded on the asset, followed by a massive drop in price. All right. And look how similar that is to right here in May of 2021. You saw a huge spike in the number of dollars being traded on the asset. In fact, it happened to be the most dollars traded on the asset throughout this entire cycle was right here. So you had lots of people fleeing the asset. So lots of capitulation, lots of people that bought the top, people that bought the dip, whatever the classic YouTube sayings are. And they all got wrecked. And you can see them capitulating right here. It's all embodied in this move right here. So what we see then though, and this is going to be critical, this is how you can identify when a recovery is at least, it may not be full out that, we're going to the moon, that we're going to new all-time highs, but you can see that things are starting to turn around. And that is this right here. Back in 2019, the beginning of 2019, you started to see volume for the first time picking up with positive price action. So you could almost see to a day kind of when this recovery started in hindsight. And it was kind of right here. So you had this huge move to the upside. So we went from around 4,100 up to around $5,000. And I'll just zoom in so that we can see this right here. So you could see right here on this day. So April 2nd, we go from 4,100 or so up to around $5,000. And that was accompanied by a huge increase in the number of dollars being traded on the asset. And that trend continued. All right. So you can see that that trend continues from here on April 2nd all the way through July. So the middle of July. That's kind of when this mini bull run tops out. But notice that the number of dollars being traded on the asset continue to increase. It continues to increase all from April through July of 2019. At that point, it starts to retract. But I want you to notice something critical here. It retracts, but if we draw sort of base levels for the move that we made, notice that each time it retracted, we made a higher low. All right. So we were making higher lows and higher lows and higher lows. And we continued to do that all the way through the beginning of the, where I would call the bull run getting officially kicked off, which was right here in the end of October into November. All right. So you see that each time we sort of came down, we were making a higher low. And that was important. So we had this huge amount of dollars coming into the asset right here, starting in April, all the way through June, followed by a retraction. The price then retracted with it. We went all the way down to, a 50% drop, but we had just experienced at that time nearly a 300% increase in price, right? Because we were coming from down here at around $3,200. We went all the way up about 300%. Okay. So we were trading right at around $13,500. So, a lot of people made a significant amount of money during this time, during this price run. Now, like we said, the volume then started to retract, but you still had an accumulation period here. All right. Just because the price retracted doesn't mean that this big move wasn't significant, because ultimately it was very significant. And then what you saw was, again, after the COVID capitulation event, you continued to see higher volume than we had been experiencing throughout the bear market. So when we just kind of pull back from here, when you take a look at this drop in volume that we experienced from this peak down in this bottom, the amount of dollars flowing into the asset had dropped by around 94%. Okay. So it was a significant drop. Now, we then started to see, and this was ultimately going to be your sign that the volume was picking up, was this uptrend. And that was going to be key. We started to see an uptrend in volume. So let's look at where we're at now then. So we have seen that essentially the liquidity in the market from our positive price action peak here in February all the way until our low, it dropped around 63%. So that tells us a few things. First of all, that's very similar to the drop in price that we've seen in that time. So if we just measure from this level to where we're at right now, you'll see that it's around 50%. So these two things are going to be highly correlated to one another. And in fact, if we just look from our actual price peak to where we're at now, we're down around 57%. And our liquidity in the market is down around 58%. So these two things overall are kind of going to go hand in hand. Now, what we see though, is that this liquidity in the market has done nothing but essentially trend down. We've had some price spikes like we saw in November, but notice one thing important here. This is how you could kind of tell that move in November, wasn't all it was cracked up to be, because we saw increased liquidity coming into the market, but it was nothing on order with what we would expect for the kind of price move that we were making, where, we went from around 30K all the way up to 69K. So we had this massive increase in price, 133% from bottom to top, but the increase in liquidity wasn't commensurate to the price move. So this was sort of a warning sign that, something's not right here. And sure enough, the market just crashed from that point. Okay. So the price move didn't match the dollars coming in. It didn't match the sentiment. It didn't match the number of participants in the market. And so what we're seeing is this volume continues to decline. Now, notice this increase in volume right here. That was due to this massive capitulation. So this is not what you would be looking for, because the volume spiked. Indeed, it did here, but that spike was associated with a sell-off. So ultimately, what we'll want to see in order to sort of maybe believe that we're actually looking at a recovery would be something like this, where, you know, our price is kind of doing something like this. Maybe we have some up and down, but it's slowly trending up. And what would we want to see with our volume then is something like this with the green candle. We want to see that volume increasing with upwards price movement. Because if you're seeing an increase in the price, any kind of increase in the price, but the dollars being traded on the asset are sort of weekly increasing or even heading down, that's how you can, with a fairly high level of confidence, know that you are looking at a fake out, and that, you know, what you're experiencing at that time is little more than someone trying to sort of move the market so that they can use the retail market for exit liquidity. And we see it time and time and time again, where the price goes on a 15, 20, 25% run. People FOMO in right at the wrong time. They FOMO in right at the end. And then we see older coins get mobilized in a sell-off, sold to the retail market as exit liquidity. And then what do we see on chain? We see that the retail market then, as soon as the price drops, dumps those coins at a huge loss. And we see it over and over and over again. And it's the thing that we try to stop people from doing on this channel, because, you know, we have the metrics, we have the ability to see what's going on. You know, this stuff isn't, you know, being hidden from us. So to not be using this type of information to sort of assess what's going on and to understand the market better, I think is just silly. It's easy to look at. We have this information here. So this metric, it's an estimate of liquidity. You can download this metric on my Discord channel. It's a free trading view indicator. And, you know, I think that ultimately, until you see this turnaround with positive price action, anyone who's telling you that we are in a recovery, you know, they aren't looking at the right things. So that's going to be it for this one, guys. Until next time, as usual, see you.